Good morning, everybody, and this is your DAX day trade setups for today. So, still looking very, very shaky here on the 8 hour. We do have diversions, and you can see this level that we are trying to defend. And I just want to put this little swing high here at 17,900 in as well. But if you just look at this high, higher high, higher high, diversions, and then we flip to a lower high from yesterday. So we are obviously waiting for the Feds in the US at the moment. That's kind of what the whole world is now waiting for. So I don't think you're going to see much more than what we're seeing at the moment, to be honest. I don't think you're going to get anything different from what we're seeing. So if you look at this on the 3 hour, there is a strong area of support where we are right now. And this is 17,955. You can actually round it off to 17,950. Look at the oscillators in the 3 hour group to the downside again. But I'm just not a fan of it. You know, this level here at 17,900 or 17,906 is fairly strong. It is a weekly high, and then there's another one just below there. And this one sits at 17,817. Now, that's kind of the area that I'd be paying attention to. We do have a bit of a gap where we are now. You can see there's the gap there. So we gap down onto it to close it on the hours. Interesting, but we do have another gap further down. Another gap further down. And there was one. There was another one further down. Let's check these two. That's not there. I must be. No, there it is. Oh. Quite a substantial one down there. So I'll give you the level shortly. Yeah, so this is the bottom of range, or is this a rounding top? Your guess is as good as mine at the moment, and I don't really want to take a guess at it right now. So the way I'm seeing this is we had a fairly decent move to the downside. We're in amongst moving averages, so that does indicate that possibly just going to range. But if I just drill down to the 15 minutes and have a look here, this is all hinging on Euro USD at the moment for the DAX. And Euro USD is looking a little bit bearish, so this should follow suit. Now, get the levels in. So we do have a very strong area of potential resistance here. This pin bar is important. Let's get it in, see it there. And you can see we tried to find support on it, as I was saying yesterday, but kept making the lower highs. Basically just made a flat bottom triangle and then broke the downside to the next level of support, which is kind of where we are now. Look at oscillators group to the upside. So I would be of the opinion we are either going to go sideways and wait for the noise. I wouldn't want to be jumping in short right here at 17,955. Definitely not. There's just way too much support there. So this little level above here, 17,979, is of interest, as is 1800. So I think 1800 would be my preferred entry. Stop above the high of yesterday. That's an 83-point stop loss. And I would argue that we're probably heading for 17,900. So it's a one-to-one trade. Nothing really spectacular, but I don't think you're going to get much more than that. Otherwise, what is going to happen is you're just going to drift a bit higher, drift a bit lower, and just continue sideways until tomorrow evening when the Feds come out. So I'm a little bit cautious here. If we just zoom out to the daily as well, you can see we haven't really gone anywhere. We've just gone sideways, creating new highs, but there's still daily diversions here as well. Trend is very strong to the upside, so we need to keep that in the back of our mind. And look how long we can go sideways. It was almost 2 months in December that we went sideways. So from 7th of December all the way through to the 15th of January roughly, we just continue sideways. Just over a month and a bit, or 30 days or so, before breaking to the upside. So, and you can see what happened with the oscillator as well. They eased off. So that can also happen. We can just continue sideways for quite some time until the oscillators ease off and then continue. Trend is strong to the upside. We're not going to debate that. But when you look at this on the hour, it's just looking a little bit tired. And because we've tested this 17,955 so many times, I'm very reluctant to just jump in long at the moment. And we have a crossover the moving averages as well. So I'm very reluctant for that. I think if we do test 1800, I would look at that because the moving average should stay crossed over. That would give me the opportunity to look for a move to the downside. Bear in mind that you've got some juicy targets further down, 17,817, and then you have a massive gap down here at 17,585. So there's really some juicy targets to the downside. So if we do break this range to the downside, kind of I would expect us to come to 17,906, turn around, and then come and reject this 17,955 area. That would be another area for a potential short if it happens. But I'm going to need something like that to happen before jumping in. I'm not interested in just jumping in short on any of these levels above us unless there is a clear signal. And in actual fact, I don't even want to put that one in. This is the one, 1800 or 18022. That's the zone. If you get a pin bar, inside bar, engulfing bar rejection off there, entry below it, stop right above it. You can just do something like that. That's a nice juicy 38 point stop loss. I'd have a very small position and be very wary of what happens here. It's only 40 points, but I'd be very wary of what happens there. And preferably I'd like to be down at 17,900. But anyway, it's more of a sit on hands day until we get a clear signal, and that signal needs to be on the 15-minute as well. So yeah, crossover the moving averages is interesting at the moment, so you could very well get this break this morning and then come back and test it and then get rolling, or you're just going to go sideways. That's kind of what I'm seeing. Anyway, be patient, keep that money in the pocket until you see a very clear signal off structure, and don't be afraid to take the trade, but keep that position small. That will reduce your risk, which will also put you in a better frame of mind when the trade is just bouncing around doing nothing, if it does that anyway. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.